Hey everyone, thank you for attending the Place Your Trades Network Spaces to discuss agriculture, metals, and energy. This Spaces is brought to you by TraderVate, which has a custom web app dedicated to trading CME Group's new daily option contracts, including indices, energy, metals, and now Bitcoin. You can now trade these on the DOM on TraderVate's main platform as well. They're a great way to get exposure to the futures market with limited risk. I also write a weekly blog and a daily pre-market overview on markets in general that you can subscribe to at placeyourtrades.com. It's absolutely free. I will be doing a key summary of this episode with my with the highlights, my key takeaways that will be available to download as a PDF. So if you're interested in this PDF, I will post a link on my stream, as well as I'll put it in the nest here just in a minute as well. You can just click on the link, or you can go to placeyourtrades.com/spaces to sign up for it, and it'll be available and emailed out to everyone who signs up. And now on to our guests. We have our guests today, we have Tommy Grzoffi. I hope I said that right.
You did.
Born and raised in Midwest America, Tommy is a member of the Chicago Board of Trade, the owner of Indiana Grain Company, and is a commodity risk manager advisor at Advanced Trading. He's a passionate podcaster whose confidence stems from his 30-plus years of experience in the agriculture industry. He is genuine, personable, and direct demeanor sets him apart as an entertaining storyteller who thrives under volatility. Next, we have Marin Katusa. I hope I said that right. Who is the founder of Katusa Research, which is an independent investment research firm. Starting from scratch, Marin has built a large personal fortune, all through his ability to find great investments. During his career, he sat on the board of a public company, arranged over $1 billion in financings, and written a New York Times selling best book, The Colder War. Marin's insight has been featured in the Wall Street Journal, New York Times, Bloomberg, and CNBC. He's traveled over 1 million air miles, visiting over 500 research projects in over 100 countries. Katusa Research is committed to helping individual investors learn how to navigate the complex investment world. To that end, they have created a large amount of educational material that can help anyone become a better, smarter investor. And you can go find that. His website is katusaresearch.com. And I think there's also a link on his Twitter handle. All right. Now, with that out of the way, let's get started. I'll start with how we do this in a round. I know I haven't had either one of you on before, so nobody's sitting, not talking forever. We're just going to do rounds of questioning. So I'll start with you, Marin. I kind of want to dive right away with metals, because you wrote a really interesting piece in June about mining finance. So can you talk a little bit about this, or the lack of financing in general, and then specifically in the gold market?
Sure. So we can definitely separate the metals market from the actual equity of the miners. This past 12 months has been well at the low end of the last 15 years of mining equity finance because of the cost of capital. Right now, the investors can have the pick of the litter. So it's about picking your geopolitical risk. Remember, God may have created the gold and copper, but the devil took it and spread it around, and usually it's in screwed up places. Most of my traveling, people think it's a glamorous life. Unfortunately, I'm not looking at tourist attractions. Most of the places are shitholes. So you look at all that, you look at the infrastructure, and more importantly, the massive capex inflation, because it's not just building the mine, it's not just getting the crushers and the trucks, but it's also the auxiliary infrastructure you need outside of the mine, the roads, the ports, access to the smelters and refineries. So you look at what's going on in Africa right now in the uranium sector, specifically in Niger, where the old Areva, Rano now they call themselves, have spent most of the last 50 years developing the Arlit Basin. That's upside down. And you're going to see more of that. We wrote about that in my second book. You mentioned my first book, but my second book did a lot better than the first one. It hit #1 in America during COVID. And it was about understanding geopolitical risks in your investments. So for me, and after being one of the largest financiers globally in the mining space, I've learned that the rule of law is more important. Yes, grade is king, metallurgy is queen, but people forget that the highest grade operating gold mine in the world is in America. It's not somewhere in some backwater. So there's incredible opportunities in safe jurisdictions using modern technology. And that's basically what my mantra is about.
And then I wanted to talk about Chile, because there's some big news going on over there, particularly with regards to the lithium market. So looks like Chile is going to nationalize the lithium industry, which means, the big producers over there, SQM and ALB, will be kicked out of the country, basically.
Well,
so what does this mean going forward in the lithium markets? Or explain if I'm not explaining it right.
So it's a good tagline. So they're not quite nationalizing everything today. And remember, nationalizations actually happened in Canada, with the first Trudeau. But what Chile basically said, a third of the world's copper comes from Chile. And if you look at the lithium, the salars, they're a massive producer. But what they have said is the government needs more of a take. So moving forward, any new project, 50% has to be our partner. The government has to be your partner. So that's kind of their first step of nationalization. But of course, they're going to increase the taxes, because that's the one thing politicians do succeed at. So that's why you've seen Albemarle just recently put 120 or whatever it was, 118 million into an exploration asset in James Bay in Canada. That was spun out of my buddies, the Osisko group. That was Patriot Metals. They are writing big checks to diversify the political risk, because the writing is on the wall. Whether the young president in Chile, he does have his former communist roots from the former Yugoslavia, where his ethnic roots are from. But that mantra of foreign companies need to pay more is a growing phenomena that I've seen in the last 15 years across the world in the emerging markets. So that is going to only get worse, not better.
Sorry, I forgot to unmute myself. So, is this a particular problem in South America, since we are seeing sort of this leftist movement growing?
Definitely. And you're seeing it in Africa. There's certain parts of Canada and the US I wouldn't touch for mining. There's others that I think are fantastic. You're going to see also in Europe. That's been a 30-year phenomena. So the world, that whole NIMBY, not in my backyard, it's not just for pipelines, but it's projects, and everybody wants to drive an electric car. Everybody wants to decarbonize. Everybody wants to go green. Unfortunately, no one wants to go down the food chain to figure out where do we get all these minerals and metals, and how are we going to get there. Now the lithium market is changing. If you look at the big battery guys, if you look at what the big auto manufacturers are doing, they are looking to diversify outside of the salars. So Chile is kind of biting themselves in the ass anyways, because they haven't quite understood that the American companies don't want to rely on China with the salar because of the way the processing goes. So they're looking to get spodumene or the lithium clays, which are big resources. Think of it as America's fracking moment for lithium. And America has incredible assets. It's just people have gone to the emerging markets because it's been easier. And that's changing now. So just like fracking changed the American geopolitics and the oil game, you're starting to already see that in the lithium sector, in the copper sector, in the gold sector, and the metal sector in North America.
Do you think there is a problem right now with sort of our permitting process? It seems, kind of takes a very long time. We've got a lot of bureaucratic red tape. Do you think that we need some sort of changed in that as far as legislation is concerned and getting permits up quicker? I mean, if we want to reach these reach these EV and battery goals.
So when you mentioned in my bio that about 20 years ago, the first company that I was a founder of became Canada's third largest producing copper mine. And it was a past producing mine. It got shut down because prices were low. It was actually owned by Newmont, which is the second largest, I guess they're technically the first largest producer of gold that's publicly traded. But they were a major copper producer. The bean counter said, let's get out of copper. So they sold that, and then it shut down. That was a past producer, so you had what they call the brownfields, and it still took about 4 years of permitting. And we started that in 2006, so you're looking at 17 years ago. The process for mining has always been difficult to produce. Oil is a bit different because in the mining sector, it's not just that you're applying for your permit. You have to also apply to get your financing because it's so capital heavy up front. Now, if you're starting in an area that's green, grassroots, never seen development, there's a lot of type of air permits. You got your water permits. Where's your tailings going to be? What type of tailings? And where are you sending your concentrate? So there's it's a very complicated, detailed process, and it's always taken many years. Is it getting worse? I think so, because with the expansion of the media, a lot of articles are being written, or the politicians are giving more time for NGOs' voices, and the science isn't necessarily always being focused on. But in certain jurisdictions, like you go to Utah, South Dakota, Nevada, certain parts of BC, certain parts of Ontario, if you have the real project and you're a real group and you're doing it with science, you will get permits. And there are companies getting permits, but it's definitely getting a lot longer in the emerging markets, which that's why in the late 90s, the big companies like, for example, Homestake was the largest producer of gold in America and South Dakota. When they merged with Barrick, they went outside because they didn't have modern technology. It started, gold was $280 an ounce, and they were going to the emerging markets because it was cheaper and faster to get your, recovery of capital. That's now changing. So would I want to go and permit something where they don't want you? In BC, many permits have been rejected because the locals did not want them there. The land developed over the couple of decades into like you look at Kelowna and the Okanagan area, a lot of the Alberta money went there for holidays, and there's their vacation homes, even though there's mines there. So it's a complicated question. Is it getting worse? Yes, everywhere. Is it going to get better? Probably not. And all of that will be bullish for the price of the metals who are producing.
Excellent. Thank you very much. Now we'll go over to Tommy and talk about ags for a little bit here. Lately we seem to be seeing soaring food prices once again. Bloomberg just had an article out about rice and olive oil out today. We're kind of seeing some nationalization of ag, such as India stopping rice export to ensure domestic supply. So do you think this is temporary, or is this going to be a continuing trend?
That's a great question. I would say with Ukraine and the Russia situation, it's going to continue. None of us have ever lived through Russia and Ukraine fighting in 2022, 23. And you could study history, but every day is a different, it's like there's an agricultural bingo card when it comes to who did what overnight, what got bombed. You see grain facilities bombed. You see that the grain deal's open. We're going to allow exports out of Ukraine, and then Russia's going to shut it down. Then they do shut it down, and we're going back and forth. As best as I can tell, things are escalating. They're getting much worse over there, not better. And the markets, just looking at them right now, they want to go down so hard, but the risk of something happening with food insecurity is so real. And you got to talk about what how do I say it? Marin? Marin, is that right? I want to
Yeah,
pronounce it correct.
it's Marin, but that's okay. As long as
No, I want to say it
don't
right.
mind.
Marin said something that's so important, and he mentioned it several times. Cost of capital. So not only do we have the Ukraine and Russia fighting, but the whole economics of raising and producing and selling agricultural products is having a paradigm shift because of this cost of capital. And the whole world was borrowing money at a very low rate. The whole world, we had just a few years ago, we had $14 trillion of negative debt. I give you $100,000. You're the German government. I give you the $100,000 and you give me 99999 back. Well, we are out of that. So as I drive around the Midwest, every bank in the Midwest, flashing signs, 6-month rate, 5%. And I'm just learning myself that so many businesses were created and successful on a 5, 6, and 7% margin. And when your cost of money is 7, 8, and 9, assuming you could get it there, so many business models are being spoiled right now. And to the farmer, the numbers, what you all on the call have to remember, is the cost of capital to a farmer next year will be 9, 10, and 11%. And I know this because one of my offices is actually at a bank in North Dakota. So Tommy Grisafi from Advanced Trading has an office at a bank, and we sit like bankers do and drink coffee. Although I'm not a banker, I'm a commodity broker. But I've learned so much by just sitting there and watching money flow in and out. And the actual cost of holding grain has really changed a lot. And you throw the Ukraine into that, sure, wheat's on the low right now and corn's on the low, but big, big, big picture, just a few more things change, a few more things get worse, and we're going back to elevated prices, not as elevated as we once were. Now, here's the bad part. Never do I remember, and Tracy, when you were younger, you said we worked on the floor of the Board of Trade together. Is that correct? In the corn pit?
Yes. Well, I was a desk manager. I worked for the ESD.
Oh, excellent. You ever remember the great 3-year bull market when you and I were on the floor?
Yes.
Yeah. These things don't happen too often. And we get these, in my history, grains get these explosive rallies. No different than silver. There's a couple times in silver I've traded, I think twice in my lifetime, I've traded $45 silver. It's literally for a couple days. So $8 corn's always for a matter of days, $7 corn weeks, $6 corn months, $5 corn decades, and 4 and 3 are what seems to be normal. Maybe that shift has happened and we're at more of an elevated corn level, call it 450 for 4 years. But at any point, it can spike up just on geopolitical risk. And that's really creating a lot of havoc for hedgers and people who use the market. Obviously, end users are trying to buy it at a great price, and hedgers are trying to sell it at a great price. But when you sell it at what you think is a great price, and then literally a few days later, it's $1 above that, it creates huge margin calls. And so the dynamics of the markets, in my opinion, not just grains, but markets overall, since crude oil went negative, things have been different. Since crude oil went negative in the pandemic, the dynamics of all commodity markets has changed, and the risk profile and the tolerance for what people have of risk has changed. And I think you could speak that that's happened in metals, it's happened in energies. The one pure thing about the grains is that I was on a conference call last night, and a North Dakota farmer said, "Where do you think crude oil is going to go?" And I said, "Well, I don't have many crude oil farmers." And I sure he thinks I smart assed him. How would I know where crude oil is going to go when that we know that the people who are in charge of crude oil are really holding the cards? I remember during the pandemic when crude oil was trading like 32 and it opened at 22 an hour later over that weekend. But when you talk about grains, it's still something that I'm in Valparaiso, Indiana today. I could walk out of my house and walk 500 yards and be in a cornfield. So what we're doing in grain trading still feels more traditional, but the dynamics of it have changed. And so when you talk about India, I wrote a couple notes, just things that have happened the last few days. after this call, if you all want to Google Tyson's earnings, Tyson came out with earnings. They're like, we're losing here, we're losing there, we're doing this. Beyond Beef pretty much came in and say, we just suck at owning a company. Why our stock was ever 265, it's at 12 now. And that product was a fad. And then you see companies like Wendy's say, we raise prices 8%. And when before while I was on hold, I Googled just food inflation, and every paper that the head of economy in Britain saying it's going to be a long time till food inflation comes down. So maybe the price of the actual commodities coming down, but what it takes to get that commodity harvested, processed, boxed, shipped, stored, and resold to the consumer is staying so high because this overall labor cost and expense. And I really have to say, I had a client call me right before we started this call, and he said that so much of what he's doing running his business has changed because he's making 5.5%. He had a couple extra $1 million, and he said he was just happy with it to make 5.5% versus prepaying for a bunch of stuff and financing the end user. So in the ag industry, everyone wants you to prepay. What they're saying is, use your money so we don't have to use ours, and we'll discount the product 5-10%. And that whole thing has shifted. So the economics have shifted from what we talked about in the very beginning because of the cost of capital. It's going to have a dynamic effect on the agricultural markets.
Well, and that was, since you kind of brought up rates, that was kind of, I kind of wanted to get into that a little bit, but are you seeing a big difference being that, especially when it comes to commodity traders, there's a lot, they borrow a lot of money to buy and store commodities. So are you seeing this being a factor, in the agricultural world? Because it's right now, it's not really affecting oil too much, but I was just curious if you can tell, or if you can see a difference in the ag markets.
From the actual end user, the people who buy it, I don't deal with their finances as much, but what I can speak confidently on is that the people who grow it, as we come down, as the markets continue to come down and we go below their cost production, it's going to hit them like just a freight train in the head. If we go below the cost production for 3 months, 6 months, a year, 2 years, 3 years, because what we have to remember is we didn't just trade above the cost production for a few weeks or a month, or you had a good chance of selling grain at a high level. But we've been the equivalent of, to like give you a gold analogy, and someone could, our friends could chime in, but imagine it cost you $1,000 to produce an ounce of gold, and you've been selling it for $1,500 and $1,700 an ounce for the last 3 years. For some people for farmers who own their ground, that's what the economics of that are doing. And of course you'd say, well, we just need to get into farming. Well, it's just not easy to acquire land, own it, get it into production agriculture. But the side effect of these high prices is that every piece of farmable ground in the world is going back into production agriculture. Brazil, Argentina, other countries, and their costs are sometimes different than America. So America's tapped out. We do not have more acres to plant. We are still building homes at a rapid rate when we can and building dollar stores. But the rest of the world still has production agriculture that can get back into it. And the economies of that, I don't think you mind high prices, high expenses, but when we go into lower prices, higher expenses, and that cost, again, the numbers being 9, 10, and 11%, the economics are going to get really messed up. And I think we'll see that we go in grains, we call it OND, October, November, December. Farmers are so busy just harvesting their grain, they're going to be happy that they have a good crop or an okay crop, maybe a bad crop, depends what they have. But once they're sitting around and the snowflakes fall, like, the numbers don't look so good for 24. It cost me this much to grow my grain. It's trading at this price. I may not make money in 24. Now, not only did the farmer and anybody involved in any business cost of operating a business go up, but the United States government's cost of doing business went up. So I think our United States government will pay and correct me if I'm wrong, over $1 trillion in interest just on their own debt. So no wonder why the United States government wanted to lower rates to zero and issue a bunch of debt. But now the very debt that's hurting every business is going to hurt our country terribly.
Well, exactly. And it seems like, food inflation seems like it's going to be here kind of to stay. And I would argue that food demand seems rather inelastic. People have to eat. You may change what you eat, but, it's pretty inelastic. So I'm not sure that central banks can fix that. So where does that leave them exactly?
That's a great question. It leads to the largest tax ever on the world, and especially the world poor. I can't speak for central banks, but I could speak for myself and someone who goes shopping, and we go shopping, we see it all hit one credit card, and it's going. My credit card's ringing as fast as the national debt, whether it be getting gas that's over $4 or buying food. We're blessed that we could afford high quality food, but so many people on a limited budget, their expenses. And so what it's doing, it's just burying the poor in debt. And that's why you're seeing credit card debt just absolutely skyrocket in America. That food inflation and fuel inflation is the single largest tax ever in our lifetime. And we're all paying the tax, but some of us make so much more money than you take a single mom and what money she makes, what money she's given through the government versus someone who's just a successful lawyer or a business owner. If a business owner is massively successful and they spend 5-10 grand a year more in food, it's not as big of a deal. If you make 30 grand a year and all your expenses go up 10,000, you don't have that 10,000 to give. So it's for a poor quality of life. The poor have never been as poor as they are on August 8th or 9th that it is today, August 9th. The poor in the world and America have never been as poor as they are today.
And on that uplifting note, we'll move back to Marin and back to some metals here. So I want to ask you first, with all the demand coming from, you kind of touched on this before, but with all the demand coming for green technology from wind turbines, solar panels, EV batteries, and storage to meet 2030, 2035, and 2050 goals, do we have enough metals or even projects in the pipeline? If not, what are the implications for this? And, are governments going to have to change kind of their goals?
So, a couple of things. The previous speaker had some great points, but I would add innovation happens in the bear markets. And yes, you fund the innovation in bull markets, but you look at, fracking, and you look at in the mining, all these innovations that have been happening. The technology will be able to, the bigger companies will be able to increase their yield per acre. I don't disagree that there's no new acres being planted, but you'll be able to increase your yield. From the mining side, you'll be able to improve your metallurgy from 83% average to 86% at the mines with new techniques that are economic. And that may not sound much to the average listener, but that's like a huge game changer on the mining side. The cost of capital, I cannot emphasize enough. When the first mine I ever financed that I was a founder of in BC, Copper Mountain, we financed it using Mitsubishi as our partner. I learned a lot about the Japanese system. With MMC, they had the smelters, so they got from the Japanese, the Bank of Japan was actually the funder to MMC. MMC lent it to us, and it was a 75, the public company in Canada, Copper Mountain, 25 MMC, but they funded 100%, and our cost, 3.2% capital. That's what it was, 3.2% interest for the mine to pay back. And that's why they wanted clean con, because they also have Escondida in Chile, which is one of the greatest copper mines discovered by my good friend who passed away, David Lowell. But it's super high grade, but it's a dirty concentrate. So when Mitsubishi and the Japanese smelters and the Yokohama smelter, they bring in this feed. So remember, these smelters get feed or concentrate from around the world. They need to blend it. And even though ours was a lower grade con. We'd ship about 25, 26% con. It was a very clean concentrate. It didn't have the antimony, didn't have the mercury and the fluorines, all these dirties that cost a lot more, but they would blend it with the escondida. So what I see happening is the big boys will hedge out. The smaller producers, whether it's in copper or gold, they're not going to be able to have the balance sheet to hedge out to the big smelters. And the bigger boys will be able to hedge out, and there'll be consolidation in the sector. And that's always what happens in the bear market. So are we going to be short in material? I bring back the greatest example, probably uranium. You look at the cost of capital. When my best friend from university is the CEO of America's largest uranium company. And we just celebrated in January his 20th year and my 20th year in uranium. And back then in 2003, there were 25 companies to invest in. 4 years later, there was over 500 companies looking and exploring and trying to develop uranium across the world. And at the big conference that I organized in 2007, I got booed for saying, this doesn't make any sense. How could there be 500 companies and all these geologists and the G&A? And 10 years later, by 2017, yes, you had Fukushima happen. Yes, you had a bear market in mining. But by 2017, there was less than 20 companies globally exploring and developing. And because the cost of capital was so high from the developer side, we decided to fund it, and we picked up royalties on the greatest producing uranium mines at a fraction of the cost you could have got it 10 years earlier. So what's going to happen is they're not going to run out of metal. I know everyone talks about peak oil or peak gold or peak copper. It's peak nonsense. There is so much of it around, but what's going to happen is the government take is going to increase. The taxes are going to increase. So you're going to have to be careful in the geopolitical risk of that. And then you got to make sure you're with a management team that have the balance sheet. They're not over indebted, because right now in the mining sector, on a producing asset, the cost of capital, if you're a major, is probably 9 to 11%. If you're a mid-tier, you're looking at anywhere between 12 and 15. And if you're a junior producing less than, call it 500 million in revenue, you're a junior, your cost of capital is anywhere between 16 to 20%. So it's a loan to own. And the guys, what are the banks going to do? Well, they don't want to operate this stuff. So if you're big enough and you have the balance sheet to carry it, they're going to extend and pretend. So those are kind of what I see happening in the metal space.
And so, well, and since you brought up uranium, I wanted to kind of get your thoughts on nuclear and uranium, because the West, still seems quite apprehensive, where we are seeing a lot of nuclear facilities being built in Asia. We're still not seeing that much interest in, say, Europe and North America.
Well,
and do you think this will change,
no,
or just your thoughts in general?
I don't think it will change quickly. I've seen the narrative for a long time, for 20 years. But what I do think is going to happen is, where are you getting? First of all, there's a joke in the industry that's not really known. Don't invest anywhere where France has an embassy in the uranium sector, because they've just been pissing everybody off. So that's where you're going to look at, is where are the supply. So what is China doing? Well, they've obviously partnered up with Rosatom, their big Russian group. You got Kazakhstan, which essentially was funded, and I wrote about this 12, 13 years ago, 14 years ago, saying, hey, they're going to keep taking more from the foreigners who brought the technology. Remember, in 2003, Kazakhstan produced less than 1 million pounds of uranium. Today, they're the world's largest producer and produce over 40% of primary uranium production. That's in 20 years. No other country in no other commodity has been able to pull that over 40x increase and that dominance. They're basically the OPEC plus in the uranium sector. But because of their, even though uranium went down, the tenge, the currency in Kazakhstan, it depreciated at a greater rate than the price of uranium. Remember, uranium before Fukushima was around 75. It went down to $17 a pound, the low. Today it's around 53. So at $53, it's mega boom time for Kazakhstan. In the US, people forget, in the early 80s, America was the world's largest producer of uranium, producing over 40 million pounds of uranium. So the resources didn't disappear. There's still innovative new technologies getting better to produce in the US where it's permitted. So for me, I have zero interest going to Namibia, where everybody thinks there's huge resources, which there are. But what are you going to do with those resources? Nobody's been able to exploit them. And even when the China national companies, the state-owned companies, have gone in, their cost of production is like twice the spot price. They don't really care because they just want a secured, stable price. Plus, in the uranium, you have, Cameco, who's more of a buyer of Kazakh uranium, bring it to Canada, slap on a Cameco sticker and sell it to America as, Canadian uranium. That's a big trade that's been going on that, everyone turns a blind eye to. That's going to change. So, for me, I don't want to go to Niger and the Arlet Basin, which is a fantastic geological resource. And that's why the old Orano, which is the old Areva, which is the state-owned French producer for the uranium, which is over 70% nuclear in France, they went to where the resources were, but now the geopolitics is working against them. Hence why now they're investing heavily in the Athabasca Basin in Saskatchewan. That's heavily why you look at some of the permitted resources in the U.S., which is all ISR. Back in my day, it used to be called ISL, in situ leaching. But because it was such a bad market and like you mentioned, permitting, they just changed the name to in situ recovery. But it's the exact same thing. And that's where, to me, go where you have the permitted low-cost production, which is in the U.S., which is in the Athabasca Basin, and don't worry about the political risk, which is getting higher where the resources are, like in Africa or the Stans, Uzbekistan, Kazakhstan, and those places.
And then I kind of wanted to actually, let me go to this question first, because I want to talk a little bit about new technologies, since you brought up new technologies that are happening. So what do you see that's kind of shaking up the mining industry right now?
Small advantage. Like, for example, let me give you one that you're going to laugh at, but improved. And we were the first mine in 2011 to implement it. So believe it or not, just bringing Wi-Fi to mining sites. Like, this is a pretty archaic industry. So I went up. I was a young guy. I was the youngest director in Canada of a mining company. So a lot of people were betting against me. They thought I was cocky and blah, 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 whatever. And I went up there and I really wanted to learn the processing of it all. And I'm listening to how this was done. And believe it or not, what it was the shovel operator would honk once to the haul truck driver. Once meant take it to the mill because it's ore. If he honks twice, the truck driver operator would take it to the dumps. And I was sitting there and I'm going, was that once or twice? And I asked, he's like, some this old guy. He's like, oh, you university guys, you don't know how to throw a wrench. I'm like, well, okay, that's a weird comment. But I started spending more time at the mine site, just learning the intricacies. And our resource wasn't lining up with our production. And I figured out that the haul truck drivers don't give a shit. They're listening to AC/DC while they're, or whatever band they like in their haul truck. So I decided to take away any communication between the haul truck and the shovel, meaning the assays are already set up. So in the truck, it's already determined from the shovel where it goes. And by putting up a Wi-Fi GPS signal, the haul truck drivers, we would put a major X sound in the truck and we'd shut the engine to say, you're going the wrong way. It was an 8% difference of truck driver difference. Number two thing that I did, and the industry followed this report that I put together in 2011, I decided to break down the spreadsheet and the tire wear of every truck driver. And that's when we determined that females are better haul truck drivers than men. Men are just naturally more aggressive. And why does that matter? Well, the tires are 12 feet tall. Each tire cost me $55,000. We're supposed to get 3,750 hours per tire. We were getting 2,100 hours per tire. Okay, well, some of the tires were, not as produced as they were. But that's 5% of every pound of copper is the truck tires. So if I could extend the life of my tires, and one simple thing we did at the mine site was take the waste rock and we crushed it with the equipment that's there, And every morning you grade the haul roads so there's less wear and tear on your tire. That improved our cost by 2%. Little things like the gloves at the site. So slowly, all the mine site managers would get together at conferences, share their technology, little improvements in metallurgy, oxygenation and flotation, different types of floats, all these minor changes. So the mining sector, that's on the production side. Then on the exploration side, what has really been happening is bringing modern technology to old mine sites. So taking analog data. There's a group, one of the most successful mining guys in the history of mining is a guy named Dr. Bob Quartermain. What he did was he went to Homestake. He got 100 years of analog data that's never been digitalized and digitalized it. And that gives you now a source of where that is. You bring in new software, and he's hitting incredible grades by using OPM, other people's money. There's another mine in Utah that's doing the exact same thing. It's one of the most prolific mining sites. People forgot about Tintic. The company's bringing 120 years of production data and actual assay and production history, remodeling it using intensive computer software. So it doesn't sound like the fracking moment in mining, but these are all minor advancements step by step that is going to start reducing the cost of capital because you're extracting more value of per ton of ore, if that makes sense.
Absolutely. And you wrote something about AI. Is that really something that's moving forward in the mining industry?
A lot of companies are trying to call it AI to attract the capital from the funds because AI has been such a big flow of money. It's not really AI. I've got friends like Robert Friedland, who's an incredible promoter, and he'll say it's AI. It's just science and advancements in technology. There are companies that promote that, they're able to take all this geological data, taking the geophysics, airborne surveys and getting it there. But at the end of the day, you got to still drill. Mining is very capital intensive. Drilling is expensive. Think about it as it's probably average right now in the US, $400 to $500 per meter. So like $125 per foot all in. The assay labs are backed up, meaning they haven't invested in the assay labs. So a company who's, a junior, like a sub 500 million market cap company, spent $10 million of drilling, and now there's no news coming out on their success because they got to wait 7 months for the assays, and their investors get bored, and then their share price goes down, and now their cost of capital significantly increased. So there's a lot of choke points in mining for development and exploration, and I personally would stay away from a management team that is in a risky jurisdiction and are unblemished with success, meaning can they actually raise the capital to do what they're saying to do, because you as an investor are going to get diluted out. And just as much as you need to be good geologically in engineering and mining, you have to be able to finance this capital in a market where the cost of capital is so high. So that's another risk that no one talks about.
And then can I get your thoughts on carbon capture as a real viable means for controlling emissions, either in the mining industry or, in the energy industry? Obviously, there's a lot of talk about that, but is it cost effective and is it realistic?
Well, in Texas right now, there's a land rush going on, and not in the traditional means of a land rush. What they're going into formations and locking up the land for CCUS. Now, why are they doing that? Because the government will be able to up to between $40 and $85 per ton, and that is happening in real time. Now, a lot of people, look, it's no secret I'm one of the largest investors in the sector for the transition and decarbonization, both in the compliant and voluntary markets, and I've never in my career seen more of a pushback specifically from the gold bug guys because they're more libertarian oriented, anti-government. But I tell them, I go, it doesn't matter what you think. The governments are legislating this. It's becoming law, and it's happening in real time. And oil companies are investing hundreds of millions of dollars. Some of them are planning on investing billions of dollars into it because of the balance sheet aspect, because it's been legislated. So it's happening. And it's both in Canada and the US. Now, Canada and the US have different rules on the aspects of it, but it is happening in a big way in Texas right now.
Excellent, thank you. And then let's go back to grains here for a little bit with Tommy. So we talked about Russia and Ukraine, but what are some other potential hot spots or areas that we really should be keeping an eye on as far as agriculture is concerned, or what's on your your radar of things we should be looking out for?
Great question. While I was on hold, I bought this really awesome book called The Rise of America, and I am really excited to read that. I've learned a lot. Going back to previous speaker, that while he was given the statistics of how technology always shines during the bad times, like, he's so right. And I went back and looked at a corn chart, and I Googled the price of corn over the last 100 years. And this is from Purdue University. U.S. corn grain yield since 1866. In 1866, we used to grow 20 bushels per acre. And we did that all the way until the 40s, the early 40s. World War II happened. We come out of World War II, and America just started kicking ass at growing corn. We are now up in that 180 level. And if you look at this line, it is exploding higher. And yes, we are doing less with more over and over and over. And one of the biggest things that happens in commodity markets, in my opinion, is that it's the job of the market to produce the most goods. It's spending the least amount of money to do it, using the most technology. And what that's going to do, Tracy and listeners, is the weak are going to get weeded out again. Just like here, I had a friend who told me he was struggling in the real estate business. Of course you're struggling selling houses in Valparaiso, you schmuck. There's only so many houses in Valparaiso, and there's like 500 real estate agents here, and there's only 100 homes for sale. And so now the real estate market is getting rid of the inefficient person who wasn't really that great at real estate. So some of the headwinds, I had a listener who's listening, he said, don't forget to mention that we're really battling with the thought of climate change, or what that looks like when it comes to how we treat our ground and how we extract the food, food, fuel, and fiber out of the ground, versus what the government, the way they think we should do it. So certain people think we should be eating all natural and doing this and doing that. And my thing I always say is that organic farmers are neat. They have to spray at night, right? And one of the greatest headwinds in another black swan event that would come to agriculture, especially in America, is that we're not really in that much control of our fertilizer. So keep an eye on the world fertilizer, where it's produced, in geopolitical risk there. Fertilizer would be one of the biggest things. So when you look at this corn chart, what changed from 1866 to 1940? I don't know. But then you could see we got better in this green area. That's called 1937 to 1955. Then 1956 to date, that line is just going straight up, and we are just doing more with less. There is one little red dot on the chart, and that was 2012. And droughts are real. Droughts affect 100% of the acres, and floods and hail and everything else, Mother Nature. It always seems bad when it happens, but it's not as large of an area as one would think. So to answer your question, I would say definitely fertilizer, and access to fertilizer and the cost of fertilizer will be one of the major influences for times to come.
And if you could, just as a side note, maybe post those charts and I'll retweet them as well, because that would be really interesting to see.
Absolutely.
And awesome.
Tracy, one thing I'd like to add about that,
yeah.
The largest fertilizer company in America is called Mosaic Corp. The CEO is a friend of mine. His father was a very, very close friend of mine. And when you look at geopolitical aspects, Belarus is a massive fertilizer producer, that's in the Russian camp. You look at Brazil, massive producer, not exactly. Brazil's going to do what Brazil's going to do. But if you look at between the old Potash Corp, which is now Agrium, and Mosaic, they have over 400 years of supply. Okay, it's about cost of production for it. And more importantly is, you look at Florida. Everyone wonders why there's so many golf courses in Florida. Well, that's actually because when they produced from Mosaic, the reclamation, it was cheaper to convert the old strip mines into golf courses. And that's actually why there's so many golf courses in Florida. If you look at the original ownership of them, that was reclamation of fertilizers, and it turned into a profit center for them, meaning technology will keep moving. And I don't know why the mining sector, I can't speak on the grains and the agricultural side, but there's some sort of weird bent in the gold sector that I've always stated, well, the US dollar has to go down and gold has to go up. And if you believe in gold, you have to bet against America. And yes, I believe the rise of America is going to happen. Why are the richest in China, the richest in Russia, send their kids to America? We don't send our kids to China or Kazakhstan or Russia or Brazil or South Africa to get educated. So yes, there's lots of issues, and I'm not pushing an agenda here. I'm not getting paid by the U.S. government. In fact, I'm not even American. I'm a Canadian citizen. So my point being, in the mining sector, there's such a bent against the government. But if you look at what the actual government mandates, some of the largest mining companies in the world got their start because the government created a bid for strategic supplies. And when that bid happens, they just want to secure stable supply. That is starting to happen again, Tracy. That was started in the 50s and 60s, where the American military said, hey, we need these type of resources. And they'd go to the domestic producers, and that created a bid, right? And then things changed in the 80s and 90s. But if you look in the uranium market, the DOE is coming out and making bids with permitted producers right now in America. And it's starting to happen in other metals. So, we're at a transition point, and I'm not saying there's this deglobalization happening, but there is a reconcentration of domestic permitted producers. So if you want the low-hanging fruit, I'd focus on de-risked assets that are permitted, built, you used other people's money, and does the management team have the ability to actually execute what they're saying to do? Meaning, are they just new to the sector? And 2 years ago, they were running a marijuana company or a crypto company. And now they want to get into mining because it's sexy, or lithium because it's sexy. Or have these guys been there for 20 years when nobody wanted uranium for 5 years? Remember, 2007 to 2020 was probably the darkest years of uranium, when the global spot price was 17 and the average cost of production was 45 to break even. That's pretty dark. So those are the guys you want to bet in, the survivors.
I like it. Then back to Tommy, really quick, because I still had a couple questions, but feel free to comment on each other's comments. But so going back to agriculture, and since we kind of talked about things coming to the tech industry within mining, what's coming into the sector for agriculture can we be looking at? Also, how is agriculture embracing this green new push?
Great questions. Let's go back to a previous comment. I spent a week and a half in Quebec, not Quebec, but in between. Where was I? In between Montreal and Quebec, and I'm going to butcher the name of the city. I stayed at. Help me out. I call it Three Rivers, but that is not the way to pronounce it. How would I pronounce it?
Well, my French is terrible, even though I lived there for 5 years.
But you can picture where I was. And something happened to me that changed how I think about agriculture and fertilizer. I'd get up, I'd go for a morning walk before I start talking to customers. In this town I was in, I couldn't understand why everyone's yards were so weedy, and just honestly, they looked horrible. I'm like, what is going on here? I've never seen so many beautiful homes and yards look terrible. And the truth is that they had a different set of rules for how they used fertilizer. And so I immediately called a Iowa farmer in America. So, sometimes we talk like, oh, we're going to run out of fertilizer. If they didn't allow us to put fertilizer on our yards and just said, no, I mean, your yard's your yard, rock it. You don't need grass. It's a waste. You don't need to water it. It's a waste. You don't need weed killer. It's a waste. That would change the whole dynamics of everything. And in this town that I had spent, they had those types of rules and restrictions. And I got to say, for the first 2, 3 days that I went walking, I'm like, this looks horrible. And by the time I left, 7 days later, it just seemed normal. It didn't really bother me. And matter of fact, it's like, that's interesting. And as you move forward in agriculture, I think we'll see shifts like that where we'll look back and say, remember when we used to put all that shit on our front yard? Remember when I used to go to Home Depot or Lowe's and spend $200-300 so I could have a green yard? Well, now we have water restrictions, fertilizer restrictions, and chemical restrictions. And I think if it comes between having a beautiful front yard or feeding the world, we're going to feed the world. That's what we're going to do. And although I said, oh, that's wild what they do up there, I came back actually changed thinking they're not wrong. The little town I'd spent in, it was Nicolette. And Nicolette is where if you are going to be a Quebec police officer, you would go to training in Nicolette. And it was just an absolutely beautiful town right along the St. Lawrence Seaway. And I just thought it was interesting. As far as the Green New Deal and everything else, I'm so far not engaged in that, in the sense that it's just not what I do. My job still is to work with the American farmer, help them hedge. I personally trade. And to say that I can get on this call and start talking about the Green New Deal and make an ass out of myself, I just won't do it. I can say this, that there's so many key words and buzzwords. I was at a summit last week and it was all about carbon and carbon neutral. And it's very interesting. And I don't know where we land. I will say this. I now realize that when I book my ticket on United Airlines, that I have a carbon score, that when I spend X amount of money on my American Express in a month, they rank how much carbon was used on just my spending. And the whole terms are interesting, but I'm just not educated enough to speak on it and say, oh, you know what, what's going to happen. This is what's going to happen with the Green New Deal. I know this, it's not free. So for every effect, there's another effect. If we want to go this way, well, then no wonder why we want agriculture to look like this, feel like this, and we want to feel good about everything. And we don't want any feelings hurt producing animal agriculture. Okay, but the human body, the 8 billion people in the world, are going to need to consume protein from somewhere else. So probably one of the greatest things to talk about and discuss is what is the future of protein and how we're going to produce protein moving forward.
I love that. Since you brought it up, let's talk about that, because we've already seen what's happening with the farmers, which is Dutch farmers in the Netherlands, right? And that's affecting not only grains but animals as well. We have New Zealand is going to start taxing ranchers on methane that their cattle produce, and dairy farmers on what their cattle produces. So, what does that look like going forward? And do you think this is going to filter into the United States?
Absolutely. Great question. It's not a matter of if, it's a matter of when. And like when you look at politics and you say the quote, that I watched how the sausage was made, there's give and takes. People need to walk up that middle of the aisle and say, Democrats, we need this. Republicans, we need that. We're not going to go back to farming. You just posted that chart of the corn. We're not going to go back to that period of producing 20 bushel corn so that we could feel good about how we did it. We're going to continue to produce more, but on the political front, campaigns are based on a lot of feel-good words. Of course, most of those things don't happen. When someone's actually elected as official, I guess what I would say is don't watch what they say, watch what they do. And what they're doing in those countries you mentioned before are frightening. So as an American farmer or a farmer in other places, it's so important to reach out to your elected officials. We're in the process right now of creating the American Farm Bill, and there's a lot of fat and a lot of pork that goes into that thing. But those elected politicians, they work for us, the American farmer, or the people representing farmers, or the people who trade commodities for a living. I feel like we have a say, but don't fight what's going to happen. If they're going to change the system, then be part of it, embrace it, and make money off it, right? I mean, if you fight it and your business gets ruined because you weren't able to change something, it's just a horrible situation. But you still have to stick to your own morals and ethics and fight for what's right. But in the end, don't let it bankrupt you.
And then once again, as investors, because there's a lot of investors in here, interested in the agricultural market. So what should we, is there something, some exciting technology or something that we should be looking at as far as advancement in agriculture is concerned right now, in your mind?
Well, AI can't make farm ground. And so if you are one of the many people and familiar faces I see on this call, you can't make farm ground. You can't grow stuff digitally. AI helped me something I used to pay hundreds and hundreds, sometimes thousands of dollars to do for my podcast, to have it edited. AI literally can do that now. That's really cool. It allows me to produce more podcasts at a lower cost. But we're not going to digitally make farm ground. So go take a shovel, go for a ride, go out there and go smell that dirt. That dirt is the future and always has been. One of the greatest hidden secrets, which isn't so hidden anymore, is the investment in farm ground. And I'm not going to dare say, is it overpriced? Is it this? Is it that? Well, of course it feels overpriced. But anytime you talk to a farmer or rancher, when they've had a chance to buy ground, it's almost always felt overpriced. If you talk to any great American farmer in their 70s, they said farm ground never seemed as expensive as when it was $1,200 an acre in Iowa and dropped to $600. $600 seemed like a stupid price to pay for farm ground. That's how miserable farming was. And that very ground now is over $20,000 an acre. So the actual physicalness of farming is still something to think about. One other thing I like to talk about when it comes to American agriculture is that if you love yourself and you want to buy a lake house, just keep doing what you're doing. But if you love your grandkids, put tile in the ground. One of the greatest innovations in American farm ground is tiling ground. It's pretty simple. There's a piece of pipe with holes in it, and you get rid of the water. A farmer is always fighting water. They either have too much or too little. And so rather than farming 2,000 acres of so-so ground, to get down to farming 1,000 acres of perfectly patterned tile ground could be the single greatest investment you could ever get your grandkids.
I love it. All right, so we're coming up on the hour, and so we'll do the final round, and the final round is the same question for both of you. We'll start with Marin, and it's basically talk about something that you wanted to discuss that maybe we haven't, and also really as investors in these sectors, what should we really be focusing on, say, for the next 12 to 24 months?
I think we did discuss the geopolitical risk, but I think when a bank analyst or the bankers in the metals side use a 5% NPV for a project in Botswana or in South Africa, or comparing it to Nevada or Quebec or South Dakota, I think that's complete nonsense. Just because it's producing in Argentina, that should not have the same discount rate. The other thing I think is complete bullshit in the mining business is they're using, an NPV 8 for a development asset, but your cost of capital is going to be higher than 8. So how can you use 8 as your discount? So mathematically, there's this huge scam going on that no one even questions the discount rates. And that's a huge difference to your valuation. So that's one thing that I just would reiterate to everyone. I talk about a lot of that in my book. But the other thing is a hot topic that people in the business hate when I bring up is what the previous caller said when he booked his flight. He said what his carbon count was. And as we go digital, which we're going to go, at the end of the year, your household will be clocked on not just how much water you use and how much your electricity, but you're going to have your carbon footprint. And as the world gets into more of this, and it's going to, what are the politicians most successful at? Taxation. And that's going to be a new form of taxation. So when the previous worker said, yes, it is true that the inflation is hitting the poorest the most. And when he went on a travel trip, that's a privilege and that's an honor that he's created for him and his family. But he's also going to have to pay for that now in a carbon footprint, which is a new cost that is going to be coming. I call it the imaginary variable of the economy that is going to come in a big way. It is already happening in many states across Canada. Tracy, as you know, our wonderful leader, has implemented that, and it's going to happen, and it's starting on the fuel transition, in the fuel composition. It's already hitting the oil guys, hence why they're doing all these investments in CCUS to try to get all these different sorts of netbacks on the transition that is happening. It's already happening on the fuel composition side. The Marin, the boats with IMO 2020, it's happening there also. As the electrification happens, these are going to be all metrics or variables that the governments will use to tax those who are moving around or benefiting, meaning how can you tax the rich more? Well, tax their footprint. And the poor will vote for that too, because they get to go on vacation. So screw them, let them pay it. And I know that's a controversial topic, but the corporations and the citizens are going to start paying in a big way. And I think that's going to happen within the next 20 years. That the carbon footprint is going to be something that the West has not really put into their financial metrics, which will moving forward.
So I'll be tracked like animals.
You already are. You already are. I was at Sergey Brin's house in last May, and we were talking about all these different aspects, and you already are being tracked on all that, Tracy. Your credit card has all the data, and Amazon has all of the data on the carbon footprint of all of your purchases. Your Google flight, your Air Canada. Remember, it used to be your price, number of connections. Well, we all travel a lot. What's the first thing you want? Minimum time to travel and the most convenient time to travel. Then you look at the prices and go, okay, what's the most logical price? Now, before connections, your carbon footprint it's a larger font than the connection time or your time traveled. They're already putting it there. It's already, it's there if you want to connect the pieces where it's going to go.
And on that uplifting note, we'll go to Tommy to answer the same question, which is, you can talk about something that we haven't discussed or haven't been able to discuss that you wanted to talk about, or as investors in this sector, what should be looking at over the next 12 to 24 months, or even further out, if you choose.
Well, first of all, I'd like to thank anyone who joined the call for taking an hour out of their day. We understand how precious time is, and thank you for having me. I learned so much listening with our co-host here, and it's really got me thinking that things are changing. You can fight it, or you can learn to work with it. Change is what's made America great. One of the saddest things I get to witness every day is a farmer try to pretend that they're not great at what they do. When I know they are, they talk down to themselves to maybe say, oh, the crop's not there, the crop's not there. It would be interesting if every farmer in America act like every day of their life they were awesome at farming, and over time that they were going to know that they're going to get better at what they're doing with less. The most interesting thing I think that's going to happen over the next 12 to 18 months, obviously, is the cost of capital. In this great reset, any time in history we've went through a boom market in commodities, we have bear markets. I've never seen it not happen. And I remember being on the floor of the Board of Trade when corn went to 8. I remember a broker saying, we'll never go under 5. The next year, we went down to the lower 3s. It took 2,800 days for Board of Trade futures to get back above 5. That's how great we are at producing commodities. And when we produce a lot with less and get better, the talk instead of how bad the crops are is, well, how great is the innovation to move forward, and what am I missing? And as soon as you could find out that what am I missing or what should I be trying, how willing are you as an investor or someone in agriculture to lose a little to find the next what's cool? I remember being afraid to buy Bitcoin at $1,200 because I was going to lose my money, and $2,500 I was going to lose my money. Well, it's had its ups and downs, but yet there's still great investments out there. But you may have to lose money on some deals to find that next truly great thing in American agriculture and world agriculture for that. So once again, thank you, everyone.
Absolutely. I mean, I think we're in a new regime where volatility is here to stay for quite a while. But that said, thank you. I want to thank both our guests very much for taking time out of their day to discuss their insights with us. I encourage you all to please follow them, check out their websites, check out Marin's books. And thank you to all the listeners today. We really appreciate you taking the time out of your day to listen to all of us. Follow Place Your Trades, of course, to find out what else we have going on over there. There's a lot going on. And with that, again, I just wanted to say thank you to everybody. And we will see you next Wednesday. Have a great day, everyone.